so many residential buyers agents are pushing for is buy 10 properties fast. Or the goal is most people want to get to 100k in income, passive income from property and retire, right? Now, most residential buyers agents, they're really good at buying residential property. Great, good on you guys, but it's not the only strategy, and that's what they're pushing people, is to buy as many residential properties as possible to get, and buy them as fast as possible to get them to 100k in passive income. Obviously, the faster you buy them, the better off you're going to be further down the line, but you can get to this goal faster if you don't buy 10 to 20 residential properties by mixing in commercial. For example, you could buy 2 to 3 residentials, sit for a little bit, maybe 5 to 6 years, maybe 8 years, and then go buy, depending on what you buy and stuff, but then you can go buy a high cash flow commercial property. So
yeah, with the equity in the residential portfolio that you've already built, so it's not your cash, it's the equity in that portfolio that you use as a deposit, and that's kind of what we're talking about, is how do you build that commercial property portfolio side of your portfolio? poor choice of words.
So let's hash that out, right? Because somebody buys, let's try hash it out linearly for everybody here listening. Guys, understand there's going to be nuance to this. There's going to be different market conditions and, you know, all these different things compared to like the prices you start out at. But let's just say somebody buys their first property at 500 grand, a residential property at 500 grand. That's their starting step. Where do we, let's give maybe 2 case scenarios on how they could get to a 1.5 million, or just say a 400k equity or 450k in equity and cash, around that range, to get to a commercial deal. So take it away, I guess. I'll jump in with some nuances and different things, but I guess if you buy a $500,000 property with 100k cash in residential, you leave that for, let's just say it grows for, should we go 8% a year?
Yeah.
8%. Obviously, residential buyers agents are typically achieving higher than 10% ROI, or 10% capital growth per year. Typically, I have seen most buyers agents achieve higher than 10%. But should we stick with, say, 8% to be conservative?
Yeah, I run my growth figures off 8%.
Yeah,
the Australian average is 6 to 8%, so I take the high range on that. But yeah.
So with that, say we buy a 500k property and it's neutral after all expenses and everything like that, right? So it's not negative, it's not passive. But let's just say a 500k times 8% a year, which is 40 grand a year in capital growth over, say, 5 years, you got 200k, right? Now, let's just say that is growing in value. When do we buy another residential property? We've already almost halfway there after 5 years, right? So do we buy another residential property, Sam? And how would you suggest somebody get to this 450-ish K range?
Yeah, well, I generally like to see 2 residentials in a portfolio. That's just my personal opinion, right? If you go too early into the commercial, because there are risks involved in it, and then the capital growth prospects is, you can go straight into commercial. You get that really great cash flow, and then you can just go commercial, because you're just focusing on cash flow.
Yeah,
and that is good to a certain extent. However, from a risk perspective, I like to see both resi and commercial. And as the buyer journey generally goes, is that they save up that $100,000 for that initial deposit. That's not going to really get you much in a commercial sense. That's got capital growth prospects as well as income, because you do need that high deposit rate. So it's kind of getting that safety net in place, so setting your foundations, so you're going to have those, 2 residentials is a nice sort of foundational where you're diversified into different markets, you're getting capital growth. You're also understanding how finance works, how property works, having tenants, and getting comfortable with that scenario, and then going into a commercial play. So waiting 5 years, I'd say you'd probably want to go into a second residential prior to amplify that growth, because then if you've got 2 properties going at 40 grand a year, you're going to get there faster from that front. And then you're looking into, well, what can we do with the equity in this portfolio? It gets to, after a few years, you're getting them valued. If you're getting into a good growth location, then it amplifies that, so it doesn't take as long. But then you start weighing up your options, going, well, what is the next best path, and what can we can afford? And I'd always push to go, well, let's go speak to a investment savvy commercial mortgage broker to see what those options are, and then go for a hunt, right? Like, what's available.